The disruptive weekend attacks on the Saudi Arabian oil fields have left oil prices rocketing and geopolitical environment tensed. With around 60% of the kingdom's output at stake and disruption in nearly 6% of the world's oil production, there have been talks of further price surge. Let's do a three-point analysis of where the crude oil price is headed and how worried should India be. 1. What happened on September 14th? Well, in the early hours of Saturday, 10 unmanned aerial vehicles struck the world's biggest crude processing facility in Saudi Arabia, triggering huge fires. Saudi Aramco, the kingdom's state-owned oil company, said that the attack has actually impacted nearly 60% of the kingdom's output, and the company had to suspend around 5.7 million barrels from its production. Now, this accounts for almost 6% of the world's oil production. The price of Brent crude rose by more than 10% in the early hours of trading as well. Now, this is one of the biggest disruptions, surpassing all previous disruptions due to attacks and invasions. The Houthi rebels, a Shia rebel group backed by Iran, have taken the responsibility for the attacks. Now, lack of access to high-end technology on its own by a rebel group like Houthis is the main reason why Iran is being suspected as the mastermind behind the attacks. 2. What are the repercussions? Well, escalation in the current geopolitical tensions in the Middle East and retaliatory measures are being anticipated currently. US has already indicated unrelenting support to ensure quick action against the suspects. Military action cannot be ruled out. In such a scenario, there is an expectation of a sharp uptick in crude oil prices globally. Any escalation could lead to further disruption in supplies and could further aggravate the supply disturbance. Disruption in supplies could also lead to rapid drawdown of the global oil inventories in the medium term. US has already ordered to release its strategic reserves in order to make up for the lost supply. Now, OECD countries have nearly 2.9 billion barrels of commercial petroleum inventories and 1.5 billion barrels of government-controlled petroleum reserves as well. Now, OPEC nations have around 3 million barrels per day of spare capacity, which could enter the system as well. Now, combining both of these, there could be an ample cushion to make up for the lost barrels in the medium term. 3. What is the outlook on crude oil prices? Well, in the near term, the prices would remain elevated. However, in the absence of any retaliatory action, we definitely see prices to normalize. If crude oil sustains the current levels along with the depreciating Indian rupee, fiscal math might come under pressure, and RBI's ability to go for aggressive rate cuts to revive the economy might also get hampered. Now, in the shorter term, elevated crude prices could also stand as a negative for Indian downstream oil companies and gas companies. OMCs, fertilizer, gas downstream, petrochemicals and also paint companies might see a pressure on their margins. However, it does spell cheer for oil producers like Oil India, ONGC and HOEC by way of better realizations. Albeit the short-term disruptions, the long-term outlook for crude oil prices remains benign.